Good evening, traders. A weekly update on what happened on USDINR and what to expect by Monday or the next week. So this is a recap. This is ascending triangle in a weekly. So let's see how it happens in daily and 4 hour. So in daily, if you see here, there's resistance from high, low, lower high, lower low. Then in the previous video, I've already said that this high has to break, so that in after the daily confirmation, I can expect a strong confirmation on how the market will be bullish, and it can stretch max to 82.8120. To that level, the market can move on. And for this part, it is a conservative traders. Anybody who wanted to trade very conservative and they wanted a very strong confirmation on the direction of the market, you can please hold for a Monday candle to complete. Wherein a Monday candle, if it closes above 82.2025, we can. There's a very strong confirmation on the market is in a strong bull, and it can go up to 82.8120, and it can stretch a little bit up as well. The reason why I said this is the target is, this is a weekly resistance where the market is being getting hammered every time here, giving rise to a ascending triangle pattern. So that is the reason. Anyways, the weekly resistance, the supply and demand of a weekly time zone will be higher than the daily. So it to be safer to close at that point. So that is one case. And any aggressive traders who are in the market, for them it's a good news. Reason, let's shift a one time frame lower than daily, which is a 4 hour. Here we have a beautiful pattern, which is head and shoulder, I mean inverted head and shoulder pattern. Left shoulder, head, right shoulder. You see this? So this neckline has broke and the market is giving a little correction over here. You see this blue range, this is a resistance zone which I've drawn for a daily time frame. This one. Okay. So that didn't break. The market already almost at the tip of it to break, but which couldn't break on the last Friday. And but in 4 hours, if we see, this is the neckline has already broke, and the market is in for correction. Every time there's three type of breakouts can happen, or not breakouts. After the breakout, what might happen in the market is one. So this is a neckline break. Once the breakout happens, the market straight will go to the target. This is one scenario. Sometimes the market will go for a correction and then it will rise back and then it will go like zigzag manner. This is one type. The other type is the market can go on a sideways like this, and then it can go up, either come down. So direction will be decided post the range bound markets. So this is the two direction it can happen. But anybody who wanted to aggressively enter the market after the breakout, they should have entered right after this candle is done. That is on what is it? That is on Friday. Okay, that on 3:30 p.m. IST. So, but that's okay. But again, the market is in little correction. This correction is the reason why the candle didn't break on Friday above this resistance, and there is, you can see a shadow over here as well. So no worries. End of the day, the U.S. Interest rates, which was at 5.25, after the rise of interest rate by 0.25, the current interest rate is 5.50. And also the Fed is, there are other Fed meeting on September and October or November, and there is one December. So before the end of this year, there is again one more interest rate hike is gonna happen. That is a market sentiments and the experts' ideas to bring the inflation under control. But there will be one hike before the end of this year. That is also there. So it's a question is whether the market interest rate will go up to 6 or 5.75. So that is the what do we call? What at what point the market will rise? That is the point. Anyways, the USDINR is bullish. And to recap, anybody who want to do aggressive trading based on the 4 hour time frame, there's a inverted head and shoulder pattern, and the target is this one, the top of the patterns. Okay, so here that anybody can take it, and who want to do a very conservative trade, they can wait for the Monday's candle to close above 82.2025. So this is one. And This is one option strategy. Whoever want to build a strategy, and whereas whoever wanted to enter the market based on what do you call, you buy a future market, and in case if whoever fears that the market might go on sideways, and you might lose a capital, higher capital if the market goes against your expectation, to hedge your position and to minimize your loss. For that, I'll show one strategy here. So this is called I'll buy a future because USDINR I'm in bullish, and July expiry is already done, so we go with the August expiry. So I buy one future, then go to option. So I'm expecting the market to be bullish, so that's the reason I'm buying a future market. Second thing is that if the market goes against my direction, that is if it market goes downward, in that scenario, to hedge that one, to have an insurance point, I'm buying an option. And in the August, because the future was in the month end of August, so I'll buy a 29th of August expiry options. This is at the money strikes, at the money, this is call, and this is puts, so I'm buying one put. Fine. So what happens is that if the market goes downward direction, the premium of put will go high, whereas the loss in the future made will be corrected by the put option. Okay. Now let's see how the figure comes out. So this is the figure. If you see here, we have a your this buying a future and hedging. This will give you a margin benefit. Say here, with the margin required for one lot is just 700 rupees. So the maximum loss that can occur, even the market goes on a crash, we can expect only the minus 313 rupees is the loss. And you can expect the project profit is unlimited, which meaning as the market keeps rising up and up, before the expiry you can expect the target whatever is it. You see here there is a break even 82.56 before the expiry. This expiry is, we have it on August 29th. So before August 29th, if the market price lies above 82.56, meaning we'll be in a cost to cost scenario, no loss, no gain. Above this, based on at what price, will be in a profit scenario. Let me push this to a 10 lot so that you can see how big the margin you can see here. If you see here, sorry, yeah, I just need for a 10 lot, the margin required is just 7,000, and the maximum loss I can incur is 3,000, worst case scenario. The break even is 82.56. Let me remove this option. This is okay, yeah. See here, 7,088 with the both strikes. Now it is 17,000. You see, you buying just a futures, you will have to have a margin of 17,059, and the market goes against your expectation. The market falls to a very bigger extent. Your account, your entire account can be wiped off, and then the broker will auto square it off. To have an hedging and to protect your loss, that for that reason we are going for a hedging where the market even getting crashed, you will have to, we will have incur a loss of just 3,000, but your margin required is just 7,000. From 17 you just have to pay 7,000 alone. The profit is very minimum, small profit will have it. Still, you will be in a better zone. It is, the good thing is you have to make money consistently. Smaller profits will make a bigger pockets actually, or bigger accounts, rather than losing. It's not, we are not in a gambling scenario, right? So that's the reason. Instead of losing full capital, instead losing a very small capital in case if a prediction goes against, this is the most what is the better, better solutions actually. So let's see 82.56. Let me draw here 82.56 at what point it will lie. 82.56 settings. Okay, here 82.56. Okay, so this is the break even. So before the expiry, give me a second. 82.56 is it? Yeah, 82.56. 82.56. Okay, so the market has to go be above this before the August 29th, and this is what I am expecting a target to be. That is 82.18120. Let me set my target 82.8120. 8120. Fine. So you see here, yeah, at expiry, that is at the August 29th, at that expiry time, if the market is at what price I'm expecting, my profit will be 2875. Okay. In case if the target reaches on Monday, my profit will be 4000. Okay. So it depends on how far the market reaches the target. So we have some 20 trading sessions. So within that 20 trading sessions, the market goes by July 31st, that is tomorrow. If the market goes at that point by tomorrow, I'll be having 4000 rupees, and uh, this is the profit. In case if market goes to a very, say the market goes to 80 rupees 10 paisa, still I'll be having 3125 rupees, the maximum loss. Fine. So this is the crucial area, the point at which I'm having a very minimum loss, and this is my break even level. So at say at the time of expiry, if my spot price is at my break even, I will be just having a, you see that expiry, I will have 375 rupees or plus or minus in that area. And as the law it goes, as it goes downward, you can see the loss increases at the expiry. So 82.25 to 82.56, 82.25 to 82.56. So that is my break even level where I can have a minimum loss to no loss. Let me mark that as well. 80, what was that? 82.25. 82.25. Fine. At the time of expiry, if the market price lies here 82.25, I will incur 3000 rupees loss. And if it lies anything here in between these two area, I will be having a minimum loss 3000, 2000, 1500, something like that. If it lies near to this area, I'll be having a very minimum loss or a cost to cost, no loss, no profit. If it lies above it and goes to any extent, then I'll be having a huge profits. So this is a strategy basis. So in case if you feel that my profits are very small here, you can add a lot position, because assuming if I remove this option, with just the future alone I'll be having 17,000 rupees. Assuming you have 17,000, you can improve your lot position, like say 20 lots. Yeah. So see here, with the 20 lots, I just need only 14,000. The maximum loss I can incur is 6,000, but my profit would be 4,000. If it goes up by Monday, it is 8,000. So it depends. Like, say, for example, I'm expecting the target to reach by 19th, that is on August 10th. Fine. On August 10th, what will be my profit? It is 6,000 rupees. I will have profit. You still have a margin, you can increase the lot size. So you can decide what cost, in case if market goes sideways, how much maximum loss I can incur from your pocket. I'll try to put a 50 lots. Give me a second. Yeah, 50, 50. Yeah, 50. Yeah. So your margin required is just 35,000. The maximum loss you can incur even though market goes below 80 rupees is 15,000. And the maximum target, with this target, the maximum profit I can have it is 11,000 rupees. If it goes by Thursday or any day between before the expiry, you can set your this is the target. What is my target as per the trend analysis or technical analysis? And I'm not sure at what point I can reach my target, so I can just understand with these sliders. I can see if it goes by that date, what will be my profit or loss. So what is the maximum loss I can incur? So this is one thing. So in case if you remove your options, say you have to pay 87,000. With this option, you can have margin benefits. So executing, going on a strategy basis, it will improve your what do we call? It'll improve your my mental stability. Like, okay, the market even though crashes, I do not have to worry about my margin, whether I'm losing entire my capital or not. Instead, only a the maximum loss that is incurred is 15,000. So your mind will be set to that, and forget about how big you are making a profit in a single trade. uh, the profits are not calculated based on your single trade. Over a month or over a period of time, like say 3 months, quarterly, semi-annually, annually, or time, that in that time frame, with the number of trades, how many successful trades you have made, putting all together, what how much profits you have made. So that makes the your bank account will look in a green. So decide to build a discipline on to make a consistent profit, though it is a very small profit. So make sure that your loss doesn't go beyond your what do we call, beyond your risk loss. And then because losing a capital and regaining the lost capital is a very hardship in that. So plan your risk appetite and try to reduce your losses, as well. At the same time, have the what do you call, the probability of the trade to be successful, it should be higher. Putting both together on a long run, making a couple of profits will give you a decent returns. So don't try to play around in a single trade to be a huge capital. So that doesn't work. So this is what I wanted to explain in both the trend scenarios. So if anybody wants to go ahead with the naked buying option, buying the future alone, that is also, it's it's good to go. But given that you have surplus capital in your account, even the market goes sideways, you should ready to bear the loss. And if it doesn't reach your target by the end of the August, you should be ready to roll over with the loss as well. So to avoid that, you can go with this option, which is will have two advantages. One is with the margin benefits, where the required margin will be like compared to very less, like the 35,000, and if it 87 90,000 roughly. So it's one third of the price you'll have it. And you'll have a risk, calculated risk. You can have it, though when the market goes on a crash, you can happily sleep at the night. Don't have to worry about it. And where the profit is very little profit, this, as I said, the 11,000 is the profit on the time of expiry, that is on 29th of August, before the expiry. If our spot price reaches that point, I will have this one. In case if that price is reached before the expiry, your profit will be, again, it is interchangeable. The reason is because of we have option is volatile based market. So long weekends, holidays will have time decays and so on. Anyways, I think there is an August 15th, which is Independence Day. There is a trading holiday in India, so we have one holiday in between, then again Saturday, Sundays, and then coming back to on Monday. So this will be calculated. So putting it all together, this is there. So don't look into the profit size is like, it's a very small profit. Look for the technical analysis and how strong your technical is, whether it is in a proper trend, and how far you can expect the target to reach, and so on. Based on that, execute a strategy where you will have two benefits. One is a margin benefit, second is you will have a calculated risk, and third thing is that you will be able to calculate how the probability of success rate to be at your success rate of your trade taken. Putting all together for a longer term, it'll be a um, successful trades. You'll have a profitable trades. You'll be in a profitable trades. Fine. This is what I want to share. And please write your comments down. Please support me on my trading view and my YouTube channel as well. Fine. Anything else? If I'll post back later on Monday as well. Thank you. Happy trading. Over and out.